Hello, hello, and good morning. Happy Saturday, folks. There you go. One, two. Mm-hmm. Sorry. Yeah. But great run. Sure.
You're still top producing, whether you feel like you are or not.
I know. It's like when people say, I'm like, really? So I get to have like special meetings with Gary Keller. They have special mastermind meetings and stuff like that, which is kind of nice. Gary Keller is the Keller and Keller Williams. There is no Williams either.
Is that true? There never was?
No, there was a Williams.
Oh, okay.
There was a big, very dramatic housewives kind of thing that happened with all that.
Really?
I don't want to get, it was so long ago. It doesn't even matter. It was 30 something years ago.
Oh, it is a long time.
Yeah, but the guy still makes money off of Keller Williams, but he has no involvement in it at all. So pretty wild.
Good for him.
That's the way to do it.
That's a good deal right there.
That's the way.
All right.
That's like Sting. I just saw a little video. Johnny, you know this because I'm sure it's like, really well known. But Sting, a rapper took part of Every Breath You Take.
Yep.
And he put it in a song.
Puff Daddy.
Oh, that's right. It was Diddy,
Sean Combs,
right? And I think he's getting paid. Is it $2,000 a day? Yeah, $2,000 a day every day for the rest of his life for taking a clip of that song without his permission.
Yeah, so
that's the way to do it, right?
Well, oftentimes when you go to court over it, you can settle it in different ways. A big lump payment, or you can just go, I'll just take a little piece every time.
Every day.
And that was a good decision on his behalf.
Ka-ching, ka-ching. Wake up. I made $2,000 a day. No matter what happened, I know I made $2,000.
Keep spinning it.
So anyway, kind of crazy. So we're going to get into what I think it'll be a lot of fun if we do like a time machine thing going back to 2012. And I actually pulled up all the stats from back then. So
Can our time machine be a hot tub time machine?
Oh, I would love it to be a hot tub time machine. Yeah,
hot tub. Yeah,
I want it to be. Love it.
Maybe we should wait a couple months. We all just, January you start your resolution. So our bodies might not be in hot tub shape quite yet, right? After the holidays.
I'm in hot tub shape.
Yeah. Okay.
Gotta see hot tub buddy. Yeah.
I didn't know you were that vain, Mike.
I was thinking about you guys. I'm good.
See, team guy.
I gotta take a very quick break, so take over. My computer's about to die.
Oh no, that's unfortunate. Yeah.
Okay.
Well,
2012.
You can always join us toll free at 877-927-6969. Of course, if you're not comfortable on the radio, always remember FloridaTalkRealEstate.com. What was your instant thought to 2012, Mike Rauch?
I wasn't even doing mortgages in 2012. I started in 2013.
So I'm thinking, I wonder what the timeline works out exactly for Mike. What were you doing in 2012?
So pondering divorce was probably my main topic.
Those are the waters I was navigating.
That's a big year for me.
Yeah, that'll drive you. Yeah, for sure. And then was it divorce that pushed you into the mortgage world?
They kind of happened at the same time.
Yeah, they were running parallel tracks.
Yeah. So the reason I got into mortgages is because my ex was a real estate agent. I was like, okay, what can I kind of get into? There's a potential. The barrier for entry to become a loan originator requires taking some coursework and then passing a test, right? You don't have to have a college degree. You don't have to have any specific major. You don't have, none of that is required. So I was like, when I was considering a career change, that was kind of a natural, at least one of my options. And so the one I actually ended up choosing. So
thankfully,
I had kind of made that decision prior to 2012, but it all kind of came together all at the same time.
Gotcha.
I have a question about that. I never actually found out about your underwriting experience. I've always talked about how you were in the underwriting department, which makes you unique.
So it was when I first started, I got hired as a loan originator. Now, a loan originator position, for the most part, is commission, like straight commission. So you have to be prepared to go from whatever your prior income was to you got to earn commission. And if you don't close loans, you're not making any money. So I kind of fell into this more administrative processing, underwriting type position that was available at the time. It's after I learned the ropes a little bit, and that position, just because my brain kind of works in that way. And so I guess I stood out, dealing with my own loans, right? Like talking to underwriters, talking to the processors, figuring stuff out, asking, questions that most loan originators weren't asking at the time, trying to understand the nuts and bolts. And it just kind of fell naturally into that role. So then I was able to kind of supplement my income with a salary-based position, and then on top of that, doing my originating activities. And then, actually, I think once I started, so I was doing that, but once I started this show in 2016,
it had to
2015,
be right
2016.
around. I was trying to think that driving over here.
Yeah.
And I think that you started the show January 2016.
Yeah, I don't know if it was January or not.
It might have been
It was
late
around that time.
2015, early 2016,
Yeah.
but I'm pretty sure it was January
But
2016.
that's when I transitioned back to basically just full-time commission, full-time loan originator.
That's really interesting because I never found out about the underwriting stuff. I always
I didn't go in with an underwriting background.
Right.
I like to understand stuff, and I like to,
Mike is very analytical.
like guidelines. Like I would ask questions like, well, can you do this? And you would always go to like the oracle of knowledge, and they would come back. And eventually I realized there were actually guidelines, from Fannie, Freddie, FHA, they all kind of, and then I found out they're publicly available, right? I'm like, well, wait a second. Why can't I just
consume this?
Why am I asking you? Let me just go ask the actual source of information. And so that just kind of led down that path of a different type of loan originator. That's what I was doing.
And experience on top of experience. I love that they're like, wait a minute, you're asking questions nobody else asks.
Yeah.
You probably would work over here too.
Yeah. I remember the first time that we have this report that you go run in there called Fraud Guard. We still use it. It's basically just like a score, not a credit score, but a score for like, they're assessing your loan application information and kind of like doing something. And it's never been like you go in there and you'd see somebody like on the red side of the red and green line. And I was like, oh, first time I saw it, I was like, oh, what's going on here? And they're like, oh, nothing. But why are you looking at that? And I was like, I don't know. I saw it in here and I was looking at it. They're like, yeah, LOs don't look at that stuff. I'm like, okay. All right.
All right. I won't.
All right. Guess I don't need to. Then I looked at it further. And I was like, oh.
You're like, now I'm definitely looking at this.
Just so you people understand that Mike's experience behind the scenes of how the loans are analyzed by the people that actually make the decision of whether the check is going to be cut or not for your deal is really great experience to have. And to have somebody on your side that understands all the nuances of that really helps out a lot when you're trying to get the loan and you have a tough situation, like if you're self-employed or maybe you had new employment because you just moved down. What are other things like where the way that the money is being accrued for the down payment and the closing costs, all of that?
Yeah, I would definitely say the real expertise is in analyzing credit. Make sure there's no gotchas there because the score is not the only thing. Being able to analyze income like the guidelines would for situations such as when you're an employee, whether you're hourly, salary, if you have variable pay like overtime bonus, like those things all have rules for how you calculate them. Self-employed, definitely you have to understand how to analyze tax returns to extract the income in a way that mortgage industry looks at income. Knowing in this world alternative income guidelines. So if you're not looking at the traditional, like all of those things, definitely understanding cash, how cash is analyzed from an underwriting perspective, what type of window of time we're looking at, what type of deposits, what type of activity, even outgoing activity sometimes we're looking at. So these are all things that go into the underwriting decision process. And the loan, I always talk, I don't know how much I talk about it recently, but the loan originator, because I'm essentially assessing this stuff before you're even shopping, like, ideally, right? Like, so I have to kind of predict and look at things as if I were an underwriter, which is where that experience really comes in handy, because I have to tell you, Jim, as the agent, Johnny, you're the buyer. I got to tell you, yeah, we're going to get there. As long as we're within these parameters, we're going to get there. And as long as you don't do anything crazy here, we're going to get there. Or Johnny, listen, it's you're self-employed, the income you're showing, something's not got to change there, right? So maybe let's think about how you're doing your tax returns and what you're deducting for deduction, all of that stuff.
Sure.
You get out in front of all of that stuff is before you're at the underwriting stage. And the reason you do it before you're at the underwriting stage is because once you're in contract, not only have you spent time, energy, emotional investment, finding a house. I mean, it's a I don't want to say daunting, but it's a big moment in your life. It's a big task that ahead of you, and you want to be set up for success, right? You want to be able to get to the finish line. If you're not signing all the paperwork on your closing date, that's a major problem. That's a major problem. And so I'm like leading out all of that. So it's really critical for the loan originator to know what they're doing. I can't wait for an underwriter to tell us, because that's too late. That's too late. Exactly. You've spent money, you've spent time, you've spent energy, and it's heartbreaking if it doesn't go right. Now, sometimes it doesn't go right because the home has issues, right? Inspection issues. Maybe there's an appraisal problem, but I don't want the fact that I don't know how to calculate your income properly to be the reason that we're not closing. Right. Because then it's my fault. It's directly my fault.
And not one time since Mike's worked with us, my team, not one time has he told us he can get a loan and not got the loan. And not one single time.
It doesn't mean that every deal closes.
No.
The question is, why isn't it closing?
It wasn't because you get the call, I'm sorry, we can't get the loan. Right. I never, I don't get those. And I get ththose calls throughout the year, unfortunately.
Because everybody's got the same goal. It's about closing, right? Yeah. It's about making it happen. And like Mike noted, if it's my fault, then I'm going to do everything I can to make sure it's not my fault.
Yeah.
Including picking up the phone and talking to Ross. I mean,
you learn very early on in this business that in order to maintain relationships with real estate agents, which is really critical for me. Like, real estate agents essentially kind of usually are bringing the buyers to me, and they say, hey, they talk to the buyer. Hey, do you need to consult with, have you looked at mortgage options? I know several options. Here's one of them, whatever, goes like that. So agents are the ones kind of referring business. And if I get into a deal with you, Jim, and it doesn't close, like, why are you going to use me?
Right.
Like,
exactly.
He didn't perform, right? But that was a terrible time. So not only does it have to get closed, but also you want your customers to be happy and have a good experience and all that. There is the one that we were talking about, Jim. You said never one time. We had one.
I don't want to talk about right now. I want to save it.
Okay,
we're going to save that for the end.
Okay.
I know who you're talking about, the young couple.
Yeah, some things that can't go wrong that, maybe I handled it slightly differently.
No.
Had I handled it slightly differently, it could have been different.
We're going to talk about that one. No, I have it in my head already. It's funny that we haven't talked about that in years, and we both know exactly, because it's the only one.
Yeah.
Johnny had a really great question, Ross. What were you doing in 2012? Because you started the show with us in 2013. So you started a year after we had a big change we changed everything around after the end of 2012. We hired the law office of Paola Krasker, which had short sale innovations and Trident Title.
Right.
And then we were already short sale, loan mod, bankruptcy defense, foreclosure or bankruptcy foreclosure defense for a whole year. But we became so popular and we're so good at it, we needed a bigger team. So we went over to the law office of Paola Krasker, Trident Title, who's still with us today. And then we also brought on Ross Komarinetz from Brightway Insurance, Juno Beach. So what were you doing in 2012, Ross?
Insurance.
How long have you been doing it, though? I never really asked you. When did you start insurance?
So I've had my, this last November was my 15th anniversary of having my own agency.
Awesome.
Prior to that, I was in insurance for a few years before that, working for an Allstate.
Oh, okay.
Yeah.
How did you end up getting into a brokerage, like your own insurance agency?
So I was in the mortgage business in the early 2000s. I'd seen the writing on the wall and gotten out before everything went crazy. Mm-hmm. And one of the guys that I had worked with, he had opened an Allstate, and he had asked me to come up and work for him. So, okay. And so I was working for him, and we were doing pretty good for, whatever reason. And we had decided that we needed another place other than Allstate. Mm-hmm. And so we opened a Brightway together in 2010. Mm-hmm. And kind of through that, between now and then I've, separated and, just me. But yeah, it's been a long road. And
you had your own work divorce.
Yes.
Yeah. Office romance, office divorce. What was his name?
Which one?
Yep. So that's pretty interesting. Now you're in the Juno
awesome
Beach
run.
office. Are you still at the same place over on what do they call it? County Line?
The old county line closed.
Oh, did it?
Yeah.
Yeah.
Yeah, like 2 weeks ago.
Oh, and where did you move to?
Oh, no, county line closed. The restaurant.
I'm sorry.
Yeah,
Oh,
County
I
Line
saw
Pizza
that.
restaurant.
I saw
Yeah,
that.
no,
It
I'm-
actually made the news. County Line Pizza made the news for
It's a big
closing
deal.
down.
Yeah.
You love that place. Or you liked it.
I used to, yeah.
Yeah.
Yeah,
But,
same,
yeah, but
right
you're
in
right
that
over
Dunkin'
there on Juno
Donuts
Beach.
Plaza on North Lake, or excuse me, US 1 and Donald Ross.
Yep. That's awesome. When we started the show, Johnny, you, me, and Jimmy are the old dogs, the original gangster, OG of the Florida Talk Real Estate, which actually started out at Talk Real Estate with Rob and Jim.
That's right.
That was kind of funny. Rob was a really great partner to have during the time that he stayed. He's retired now, but he had quite the ego on him. I had done a little bit of real estate before. He had done nothing. He didn't even get his license yet, and we started the show right when he was getting his license. And he wanted to make sure that it was Talk Real Estate with, and this was a big issue for him, Rob and Jim, right? It couldn't be Jim and Rob. And some of my friends are like, oh, come on, that's ridiculous and everything. And I was like, you know what? It's easier for me. I have a little bit of a speech impediment. I was like, it's easier for me to say Rob and Jim than Jim and Rob for some reason. It was easier. And I was just like, well, let it go. But then after, I don't think we changed the name after Rob left. I think we changed the name while Rob was here to Florida Talk Real Estate. Wow, that was the old one. Yeah.
Oh, the old open.
Do you remember that? Do you remember when Rob was mad at that?
Yeah.
Do you remember that?
Oh, yeah. 'Cause he yelled at me.
Yeah, he got so mad about that song.
Is this Pink House?
Yes, and
Are you able to play this?
He was very upset because that was the beginning of our show.
Did it cost money?
No,
Why not?
he was said that the song was racist.
Oh.
And he didn't like some of the lyrics in there, and he decided that John Mellencamp was racist and didn't want it on the show. So we didn't have that anymore.
Is he? Is it? Is the song?
No, I don't
It
think
says
so.
a black man on a porch.
Yeah, it says a old black man sitting on a porch. That's racist.
I don't know that I ever took it as racist. But
I never took it as racist.
I've never thought about it that way, but there's a lot of like old songs with themes that
crazy.
you would be like, well, that's not acceptable today, but at the time,
well, the thing about music is it's for you to interpret. You take it to where you want to take it. Rob wanted to take it there.
old argument.
Well, I mean,
Yeah.
But we also went through, like Ross, we went through, and Mike, we went through a lot of transitions on the show many, many times. Joe drove Johnny crazy about how many names we had and everything. It's like, what are we? Just tell us what we are. Please, just tell me.
So
I see something similar with the clapping thing.
I'm big on
exactly.
I'm big on continuity. You know what I mean? Especially when it comes to branding. Like you just want to kind of branding. Like
Just pick one.
yeah, pick one.
Yeah.
When you're changing it
Google.
up, websites change over to this and it's different than that.
Imagine Jim would have been like,
Show
what's a Google?
Well,
guys?
one
What
of-
is a Google anyway?
One of the things we're going to be doing this year is I'm already working on the YouTube channel for my second attempt to recreate the YouTube channel. It's getting better. I'm not really promoting it too much because I really want to get clicking better. But we put out a whole bunch of short videos about Ross, and they've been pretty popular. And if you miss some of the shows, the shorties and the YouTube channel, you can catch up a lot of the stuff we talked about during the week, or during the week you could catch up on some of the shows in the short version. But when we started all this stuff, I lost the track I was talking about. I don't know. We were talking about the YouTube. Oh, the website. Yeah. So we're condensing the branding down, where even though I'm still going to have the Florida Home Pros, which is part of Keller Williams Innovations, and that's my real estate function for the show, I'm really going to be promoting the Florida Talk Real Estate website, which is now going to be, right now it's a little too centered on real estate, like buying and selling and that kind of stuff. We're stripping all that out, and we're turning it into the resource for you, for everybody listening right now. If you need a mortgage or refi, if you've got insurance questions, if you have title questions, legal questions, if you need to buy, sell, or invest.
Well, it's always been that. It's always been the one-stop shop.
Yeah.
But it's just when you click on it, you're like, it just feels real estate.
It doesn't feel, it doesn't feel right. So now it's going to be in a place where if you have any kind of real estate need, even contractors, we'll have a lot of contractors on this site. And you can go there, and the contractors we're going to have, I'm going to tell you right now, some of them I'm hoping will be bigger sponsors, but if they're on our page, I have run a Better Business Bureau and a Department of Consumer Affairs run on them and a SunBiz just to make sure that they're all legit before they go on the page. So you're getting legitimate people, and almost everybody on that page is going to be somebody that's has either worked with us or worked with our customers in the past and things like that. We're not just going to throw people on there just to be on there.
Right.
We're only going to put on people that we know and trust and like this crew right here.
Yeah, it's not going to be pay for play.
Yeah, so Florida Talk Real Estate is going to be a completely different experience eventually, and I'm really looking forward to that.
Awesome.
But the same too, the same service, the same, right?
Yes. Yeah,
Could be
we're going to
totally
have the
different,
same
but
service.
the
It's totally
same.
different.
All
but
the
the
same.
same. Just
Wow,
like
very
just like the
different.
branding that Johnny loves so much. But when we started in 2012, we didn't know what was going to happen with the show. We didn't know if it'll work or not. There really wasn't anything like us in South Florida, maybe in other parts of the state. I don't know. But I haven't heard of anybody that has a,
You guys
13 or 14 year show.
When we started, I remember they were like script phone calls and and we were like, oh no, we are not doing that. That is not the way this is going.
Speaking of scripted phone calls,
we got a scripted phone call.
I'm sorry.
It's not scripted, but we do have Steve on the live. Steve has a question about buying a house.
I gave Steve the script earlier.
Oh, yeah.
How much did he pay you? How much did he pay you, Steve? How you doing?
Skip the phone calls. I'll work for that.
How can we help you, Steve?
Well, I was just wondering, probably someone's asked this before, but I'll narrow it down as quickly as possible. If you own a piece of property here in Florida, we'll keep it all simplified, and you don't pay on the property tax for X amount of years, I think it's like 3 years, and then they start running a process where they can, actually take the house. And even then, still, from what I understand, they can actually let you still have the house if you pay a certain amount, all that stuff. But I also have a bonus question that if you decide to sell the house, and you're at the point where you didn't pay anything and they're going through the process, or before that, how exactly does that work? Like, say if the house is worth $500,000 to the county or the appraiser, whoever they go through for that, do they take that amount of money off of what you owe? Say it's like $20,000 you owe in taxes, and the rest is yours, and you can sell it. And if so, as well, how long do they give you to sell it versus you were supposed to sell it normally on your own and not have the property tax go up? I know it's a loaded question, but I'm just curious.
no, it's a good question.
It's a good question. So I want to make sure I got it right. What happens after you miss the 3 years of paying property taxes and it goes up to foreclosure? Is that what he's asking? I'm sorry, I missed the beginning.
I think we should answer that question.
Yeah.
But I don't know that you need to. I don't know if his question really takes it that far.
Can
but
you respond, Mike?
Yeah, you should definitely. So here's my understanding of the whole property tax situation, property tax auction, right? So essentially, if you don't pay your property taxes by the time they're due, which is March 31st of the year, so the bill come out in November, they're due that March, right?
Right.
If you pay it early, you get a discount, whatever. There's a tax certificate sale when you don't pay on time. That means somebody else pays your taxes for you, and they get a certificate that guarantees them a certain amount of interest over the time until they're paid back, right? So first year tax certificate sale. Second year you don't pay it on time, there's a second tax certificate sale. So somebody else, maybe the same investor, someone else is buying that tax certificate.
And that's
for
an
guaranteed
auction
return.
type thing, or you
The certificate's an auction.
Okay.
Yeah, but they're just basically they're paying your taxes for you, and then they're going to get a return on that money.
okay, all right.
Right. Third year. After the third year, there's a tax certificate sale, but then it goes to the property tax auction, right?
Not necessarily. The way I understand it is that the first tax lien holder has waited the 3 years, and now they can file a foreclosure against the property. The first tax lien holder, because they've waited 3 years to get their money back.
Okay.
And then they can file the foreclosure. Okay.
Okay. So you're saying only the certificate holder can initiate the foreclosure
for the first
action.
3 years. Yeah. For the first three. And you have to wait 3 years. You can't just buy the tax certificate, foreclose on it right away.
Yeah. You have to wait until the third year. So, so then you're saying that if that person doesn't initiate,
I think it continues.
Okay. So there's confusion there, but eventually it will go to the property tax auction, and somebody will win that. And that's an auction where you're going to bid a certain amount of money to get the house. You're going to pay back those tax lien holders
with the interest.
But then it wipes out all other liens. So if there's like a mortgage on your home or whatever, it's a way to transfer the property to the auction winner, and they get that for, they're going to pay for it. They're going to pay the tax certificates, but they're not going to have to pay for first mortgage or any lien holders on the property. So that's why the property tax auction is very scary for homeowners, because like someone's buying your house, right? There's not a chance that it's not being sold there. So you don't want to let it get that far. If you're getting that far and you have equity in your home, you have made a huge mistake. So that goes back to the other part of your question, which is what happens when you sell? When you sell. So essentially, regardless of when you sell, you are going to pay money that is owed on the house. So whether that's an existing first mortgage, a second mortgage, back property taxes, tax lien holder
down payment
certificates, down payment assistance, just anything that you owe or that is attached to the home is going to be paid back when you sell it. So as long as you sell it before it gets to the property tax auction,
right,
you're fine. You're just going to have to pay back all three of those tax lien or tax certificate holders,
plus the
interest that they've accrued, plus whatever else you own the home. Now,
plus the fees for the whole auction itself, that's included, because there's recording fees and noticing fees and all that, because they got to do all that stuff to put it on the auction. So all that,
and this
I
is
call
why
it the garbage fees.
This is why your lender likes to hold escrows for you, because they make sure the property tax bill is paid, even if you're not paying them and you're not contributing to your escrow account.
They're not letting somebody else.
They're not letting somebody come in and swoop out their lien position, swoop it from under them. So they pay it. So the bottom line is, I would say this applies for whether if you're going to be behind on your mortgage, but even if you don't have a mortgage and you're going to be behind on your property taxes, and we're talking about the way things are now. Maybe there's some things coming down the pike here that will change things as far as property taxes go. But if you are behind, you need to figure out a solution. If you got a lot of equity in your home, talk to a lender, figure out if there's some way that you can borrow money, figure out your property tax situation, and then figure out how to repay that loan. That's one way to do it. When you get behind on taxes, though, it's hard to get a mortgage.
It's really hard to get the mortgage. That's the really bad. Even if you have the equity, you might not be able to tap into it. But the good news is about that, if there's any good news about not being able to make your bills, but if the good news would be that you have time with the property tax foreclosure. You have to wait basically 3 years before you lose the house.
Yes.
So you do have time to figure out to get this taken care of.
But that interest that accrues at the tax certificate bid, it's part of an auction process too. So it's not a set amount. But if you owed $6,000 in taxes, by the time you go to pay it back 2-3 years later, I mean, it could easily be 7,000, 50,000.
Well, I'm thinking you do that 3 times, right?
Well, 3 years later,
and then interest.
Yeah, it's probably accruing several thousand on top of the bill, something like that.
Oh, right. That's not as bad as I thought.
It's not as bad, but it's hard. If you don't have the 7,
you can't pay it.
And then you don't have the 14,
right?
How are you going to have 20?
It becomes more and more bills that you can't pay for a lot of people. Just they get overrun.
Of course.
Steve, thank you for the question.
We're going to go. I got another question to that.
Well, let's go ahead. We're going to take a break right now, Steve. If you want to hold on, we'll catch you on the flip side. But let's go ahead and take the break right now. And Jimmy, we okay with that?
Yeah, absolutely.
And
I'm sorry. So we're going to go ahead and take the break.
Okay, you had to end. I didn't know if you were going to.
No, I'm sorry.
No problem at all. We got a little reset. We get back to it. Thanks for being with us on a Saturday. We are live on this 3rd of January. Happy New Year. Merry New Year. I hope your holidays were amazing. We're celebrating a bit of an anniversary today, and we got lots to get into. Of course, you're always welcome to join us, 877-927-6969. If you're not comfortable on the radio, but you need expertise, buying a home, selling a home, stuck with a home, you don't know what to do, always remember FloridaTalkRealEstate.com. Your one-stop real estate shop, access to the entire team. Pros, experts in their field. You get them all. FloridaTalkRealEstate.com. We're back in 4 minutes. Thanks for being with us every Saturday. Florida Talk Real Estate right here on Real Radio.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com. Real Radio weather.
I'm CBS 12 meteorologist Charlotte Carl. We are going to continue to see temperatures warm into the middle and upper 70s for this afternoon before a front starts to creep towards the area in the overnight hours. Clouds will build in. We'll see a few showers to kick off your Sunday. Temperatures, unfortunately, stay consistent as this front stalls out over the area.
This report is sponsored by Lowe's. The Lowe's Closeout event means the final savings of the season are here. Grab amazing deals on seasonal decor, tools, flooring, and so much more. Valid through 1/7. Selection varies by location while supplies last.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, it works. 877-927-6969. Steve dialed in. We'll wrap up a call with him in a second. You're always welcome to join as well. We got a hour and 20 minutes remaining for you on this Saturday, 3rd of January. Happy New Year. Johnny C is me. Jimothy's our producer extraordinaire. What's up, my dude?
Hello, and good morning.
Good morning. There's Mike Rauch, mortgage guy from the mortgage firm. How are you?
I am doing great. Happy 2026, everybody.
Have you gotten good at writing it already?
I've been typing in 2026
Nice.
for a couple months now, just because you put in like close dates and first payment dates. I think I've transitioned okay.
I like to celebrate the little wins in life.
Yeah.
So, because if you don't, you can go a long time without celebrating. You know what I mean? I have noticed every time I've nailed 26 when I'm writing it, and I'm like, yeah.
But are you thinking about it, or are you just natural?
No, just kind of flowing into it.
Nice.
Yeah. But
what are you writing? When you're writing dates?
So I have to like date my manifests at work and stuff. I'm dating things, so it's happening.
Yeah, my advantage is I'm writing dates like a couple months out, like when I'm doing loan apps and stuff like that. So
you've been doing this.
I've been typing it for a couple months now.
Gotcha.
Yeah.
Nice. Good
Not
job.
you're like today.
Yeah, started just a couple days ago.
Check.
Yeah. And
inventory check.
Really happy about it too.
Nice.
Yeah. Again, you gotta celebrate the little wins.
things.
I can go a long time without celebrating.
Yeah. Your brain still works. I mean, that's good.
It does.
It's good.
Yeah. I mean, a little bit.
And you're getting older, so that's like a plus.
Whoa.
Oh.
Yeah.
Hey. Oh.
Taking
Geez.
shots.
Damn.
Yeah. Yes.
Are we all? Are we all?
We are.
I mean,
I actually like it. I like getting older.
Yeah.
Older is awesome. You know what comes with age? Less caring.
Oh,
it's so good. And I had 0 F's to give when I was young too. Imagine having less.
Yeah, you're like,
nah. It's a freeing place. Beautiful.
Yeah.
Always good to see you, my dude.
You too.
Ross Komarinetz, Brightway Insurance, Juno Beach. How are you, my friend?
Doing well.
Nice. What is he showing you porn or something over here?
He was trying to answer your question. What comes with age?
Jim's showing him his phone while like secretly too. I was like, well,
Jim's like, I got this grandpa.
What?
I don't know.
Grampy?
I got awkward.
We got Gil porn over here. Yes.
Yeah.
If you don't believe that Ross and Mike are in studio, join us on Facebook and YouTube. We are live streaming. You'll see them both right there. Hi.
Hello.
Do we have to clap again, by the way?
We're going to clap at the next break, Jimmy.
Sure. That's fine.
Okay.
And of course, our fearless leader. We're going into our 14th year now. I've told you he runs a top producing Keller Williams team. Am I saying that right? Feels weird. The Florida Home Pros team. Keller
Should have
Williams
figured out
Innovation.
to clap like 14 years ago.
Totally. Right?
Yeah.
Please clap. Please. For the love of God. There's Jimmy D. Jim DePola, how you be?
Good. We got a lot to talk about. We're going to be getting into the time machine, going back to 2012 when the show started, to see where we were in the market back then.
Love it.
And then compare it to where we are now. And then eventually we're going to talk about what's going to happen in the future. Ross, I wanted to ask you a real quick question before we get into that.
You want to wrap up with Steve real fast?
Yeah, let's go.
Hold on to your question, though. Do not forget your question. You want me to write it down?
No, it's about the phone thing.
Steve, quickly, let's wrap up your phone call. And thanks for your patience. Welcome. You're back on Florida Talk Real Estate.
Oh, yeah, I'll wrap it up real quick. I just wanted to know if you actually go to the third year and you pay whatever amount they say you can pay to keep owning the house and stuff like that, how many times will they allow you to do that?
Over and over again. Over and over. You could stop making the payment as soon as you make the payment and wait another 3 years.
You can play that vicious cycle, but you're going to pay interest.
3 years instead of the rolling 91.
But you're going to pay more than you'd have to.
You pay interest. You're paying interest every single year on it. Yeah.
I would say, Steve, if you're playing that game, but maybe you have to, right? Not a game, but don't let the third tax certificate get issued. Like you have to beat that out. So if you're out there and you're behind on your property taxes, it sucks. It's like a scary situation for people, especially, you don't have a mortgage. This is one of the things that Florida's like they're talking about. Like, how could you lose your house just because you can't pay property taxes? But March 31st of that third year, you better beat that deadline.
You got to have a plan.
You better beat that deadline. Do not let it go to that auction. Talk to a real estate agent, talk to a loan person. Like you got to figure that out.
An attorney if you have to.
Yeah, you got to figure that out.
Totally.
Yeah, you know what? It's funny. You pay for everything else in life, but you don't keep paying tax on it. But for a house, you do it. And that should be more important to our country, not just here, than anything else to say, no, we'll let that go or less and not be so high priced with it. If you want people to be happy and not have, no offense, the Roman Empire all over again, then you better get to it quicker than already,
Well, we're only
want
going to be celebrating
people to be happy.
We're going to be celebrating 250 years of this country on July 4th. It is a very, very young country. We're an infant.
But we didn't invent taxes.
No, not at all. We got a long way to go before we can ever really claim that we're the best. Facts. But
the best ever,
we can get better and better and better, and that's let's keep working at it. Steve, always a pleasure to have you out there. Thanks for being with us, and Happy New Year.
Let me give you a high note instead.
That's a goodbye, my friend. Thank you very much for being there, my friend. Have an awesome weekend.
Yeah, sorry. We don't get into politics too much. We do talk about what's happening in the government and how it affects your life, right? We'll talk about government programs, things like that. I don't really want to get into the whole red and blue thing.
Right.
It never gets anywhere. And let me tell you, if you
there's shows for that.
There's tons of shows out there for that. And if you are too red or too blue, you're wrong. because they both are dysfunctional. They're totally dysfunctional right now.
That sounds political, Jim.
Move to the middle.
Yeah, well, that's apolitical, I think, almost, right?
But we're a very young country, and we got a long way to go. We can get better in so many ways, and I think talking about property taxes
very important
is a wonderful thing we should be discussing. Absolutely, not only on a state level, but I think taxes on a federal level we should be discussing too.
Yes,
but we got a lot to work on.
So this is more about impacting our lives here locally and how it affects us in our daily lives, and we do talk about that for sure. I wanted to go into so we started the show January 7th, 2012 is the year we started the show, and I was a seasoned real estate agent at that point. Johnny's
there was
fake it until you make it.
There was some kind of seasoning on there.
We did not fake it till we make it, even though every day when we got off that show, me and Rob would laugh and say, we're faking it till we make it. But we never lied. And if we tried to lie or fudge it, Johnny would have jumped on our case right at the beginning because he did not know us very well.
So you said, hey, listen, guys, we're brand new in this, but we got a great idea.
What we said was we're not the biggest team around. We're not we haven't been around the longest. We haven't done the most deals, but we will work hard for you. We're highly trained. We work for one of the biggest brokerages.
You could have said we're a brand new team. We haven't been around at all. We haven't done any deals.
Well, that's not true. We did some deals.
Oh, okay.
Okay, we did some. We didn't do zero.
More than one.
Zero.
We've done a deal or two. Guys.
Rob had done 0 deals. Rob had done 0 deals. I had done, I think, a massive amount of 4 to 6 or something at that point.
I didn't really listen at the time, Jim, but I was around.
Shame on you.
No, I was around at the time. You have to remember, from 2006 or 2008 to 2012, people were
love doctors
running scared about what was going on in the housing market. Had no idea what to do. Like, this property tax question was probably a good one at the time. Behind on my mortgage, my home, you couldn't even get a loan. You're upside down. So there was a niche there that you guys really filled at the time, which was just giving people solid information in a world where nobody knew what the heck to do.
Like, not only were we like the only resource for that, but locally, PTV, they were like, wow, look what these guys are doing. They actually mirrored what we were doing and brought in the team from Florida Talk Real Estate to get a part of they did like a telethon type thing. Exactly right. Where they took over and they had a phone banks where you could call in to talk about your distressed mortgage. Jim was on there. Like, the team from Florida Talk Real Estate
was on
and
there.
We were really, I'm telling you, like, we were the brainchild where they were like, that's awesome. We need to do that. We need that for the masses.
We had to impact the community.
Yep.
We're going to get into it a little later, but the distress sales were just crazy. When you hear what the distress sales were going on back then.
So our reach for real radio was pretty good, but not like PTV's. So that was a remarkable resource
and
that they put together. And they really put together this resource.
And it was so funny because when me and Rob when we first got the show, we wanted to get involved with WPTV with advertising and things like that. And they agreed to have the advertising department agreed to have a meeting with us, and we sat down with them. And they were like, yeah, we don't really want you part of the station. You're not big enough. They were looking for like these big luxury agents that were doing waterfront properties. And I was like, and this was like during the crash, right? And I was like, you need to help regular people, right? Regular people is where you need help. And you're telling us that we don't meet your standards is because all they wanted was Palm Beach, Palm Beach, Palm Beach. And I was like, that's not your audience.
Right.
That is part of your audience.
But they try to shoehorn that in everywhere. They'll be at the Barrett Jackson auto auction at the fairgrounds, and they're like, live from Palm Beach. And you're all, no. You're not actually. Yeah. You're not.
But I mean, they did do a good thing. They were the only ones, to be fair to WPTV, they were only ones that did that telethon.
Yes,
and everybody could have done it and had tons of calls because we got hundreds and hundreds and hundreds of calls. It was crazy. But that was a really great way to start that. That was 2013 with the beginning of Paul Krasker. The market was so crazy back then that when we switched over to Paul Krasker and Trident Title, the title company that was backing our show was going under. Remember that? And Paul Krasker bought that title company and brought it in, Trident Title did, and brought it in to
He's like,
Trident
I got
Title.
A bunch of deals coming. I need a title company. Let's figure it out.
We went down for a meeting where I introduced Paul to the people that were doing our short sales and everything. And the next thing you know, they're walking out with all these legal boxes of all the files. It was just totally bizarre world back then to be involved in that. It was just totally crazy. I forget how immersed we were in that. And Johnny, do you remember all those lies that were happening at that time? Remember the famous, I'm going to get my house free because the bank can't find the note. And everybody swore they were getting their house for free.
Yep.
And I was like, me and you, right? We're out there saying, really? How come we're not reading about that in the papers? How come we're not seeing anybody with these free houses? And then once in a blue moon, there was a guy that like won their house, right? Somehow. Won.
Yeah.
And it made front page news everywhere in the country. And everybody
didn't have to pay back the mortgage.
Didn't have to pay back the mortgage. You got
documentation problem.
Actually, we had one too. We didn't make a big deal about it, but there was a guy named Johnny. He was an old Vietnam vet. And he had called us up. And the bank totally screwed up their whole chain of command and went over to Paul. Paul got the house for free. Now, what that means is he didn't really own the house, but the bank couldn't do anything about it. So he just got to live there for free. I don't know. He probably passed now.
If he ever went to sell it, there might have been some.
No, he wouldn't have been able to sell it. He would have had big problems, but he lived there for free. And that's what he needed because he was an elderly guy.
Paul's real expertise, if I remember correctly, is it wasn't that the banks like messed up when they did your loan in the first place, is that they completely messed up how they handled the foreclosure process and what they're supposed to do as far as offering remediation options, get
relocation assistance,
whatever it was. Like they just were not equipped to handle the amount of volume through those departments that existed. Like there was always at the lender some sort of foreclosure department or people who went into default, but they just weren't equipped to handle the mass amounts and then mistakes were made. And so they weren't giving everyone like the fair process that they were supposed to.
Yeah, much like
and then Paul was like, well, wait a second, you guys messed this up.
Yeah, much like in the criminal world, if you ain't dotting I's and crossing T's, those are reasons for you to kind of be like, well, that doesn't count.
Beyond all reasonable doubt.
And that doesn't count.
That's the way it works.
That doesn't count.
So that was a really crazy time. And we were like that all the way through 2012, 2013. And then around 2014 is when things started changing, where there were less and less short sales and foreclosures and all that, less people calling for that. And then it started turning into more of people waking up. It's like, hey, I think it might be an okay time to buy again. And actually, that's the year 2014 is the year that Johnny went from 2012 telling me, I don't even want to be on the show because I don't believe in owning real estate to, hey, Jim, you got to help me find a house.
No, that's not all the way it went. It was, dude, you have to buy a house. What are you doing?
I'm skipping the middle part.
Yeah. No, it wasn't, dude, you got to help me. It was you pinning me down going, you must. Yeah. Like you're missing. I already missed the best of it. Yeah. We closed September 2014. I still got great numbers, but it was better if I'd have acted sooner.
Yeah.
2012 was like the base of the valley, I would say.
They actually, we're going to get into that in a little bit, but I thought it was forceful. 2012, but it's really closer to 2014 is when we were still going down in 2013 a bit. It wasn't as bad. We were slowing down the reduction, but it was still pretty bad.
And you were very much like, dude, you were this window's closing and you have to do this. And then
you got married and
the team, like the details don't really matter, but it was I was put in a position that was a lotto. I mean, really, even just being on this team, becoming friends with this team has been amazing. But the resource, but yeah, it was my stars aligned. And again, about 9 months is what it took from my 500 credit score to closing to keys.
Right.
Yeah. With no money down, by the way. I had no cash. I had, I'm telling you, it was lotto time, but it was all about the team of Florida Talk Real Estate.
That's actually something, if you like, what could things that are the same now as they were back then? Like people still have struggles with credit.
Yep.
Cash. And there are, with some professional eyes on your credit and a kind of a professional opinion, you can really get on track. And sometimes it takes 9 months, but sometimes it could be 3 months or 6 months. So that's still the same.
Well, because I didn't wipe away everything on my credit score. You break down the value points. It's like, well, this do this to here, get this to here.
Yeah.
And then we're where we need to be.
Part of it is cleaning up negative stuff, but really
Right.
a big part of it is optimizing and maybe even adding new credit, but making sure that all your existing positive credit is optimized for scoring, right? To give you the best credit score, not to buy stuff, not to like, do some trick about earning points or anything. No, it's like, I want to get the best credit score possible. Here's how you optimize that stuff. The other thing that is is still out there that was available to Johnny at the time, is available to new homeowners now, is down payment assistance program. So a lot of times the hurdle is about cash, how much money you have. So back then that was a challenge, still a challenge now. And there's still solutions out there for people. Some really good solutions out there.
And if you're a public servant or would be dubbed a
hero,
yeah,
not talking sandwiches.
Yeah, you can get even more than what I was able to access, which can be a complete game changer.
Yeah.
I mean, that's the reality. So yeah, the only things that have really changed is the date on the calendar, the value of the homes, the interest rate. Like those are all numbers that are always going to change, right? That fluctuates always. But this team right here, still in place, can still do everything that was done for me and my family. That's the facts. And that's why we're here 14 years later, 13 years later, still doing it.
You still have, as long as you have a team who knows how to kind of get the best out of everything. So whether that's insurance or getting your negotiations on your homes or down payment assistance, like the rates and all of that stuff, as long as you have a team that knows how to get all that so that it works best for your situation, that's what you need. And that is still the same.
Yeah.
Absolutely. Hey, Ross, before we we're going to take the 10 o'clock break. Okay. Sure. Before we take the 10 o'clock break, Ross, I don't remember what the insurance was like 2012, 2013. What was going on in the insurance market back then? To me, it was like forced place insurance was the big deal because everybody was being slammed with that. I don't know.
I mean, the premiums were a lot cheaper. That's for sure.
Yeah, houses are cheaper too.
It used to, and it was easier. The guidelines were a whole lot different. The roof wasn't as big a deal.
That's right.
Back then, a 20-year-old shingle roof was fine. No problem. I mean, no problem.
That's so weird.
I think there were a couple carriers that capped a shingle roof at like 18 years. Back then, that was the cap for a shingle, but tile would be, some carriers would give you 50 years for a tile roof.
Wow.
Yeah.
Wow.
And it was just easy. Like it would be, you could call me and I could say, hey, get your information, give you a quote, send email to you while we're on the phone. And then if you wanted to bind that policy 5 minutes later, we could bind it because you really didn't need a 4-point. Carriers weren't asking for 4-point inspections. That's the eligibility inspection. They weren't asking that unless the house was like 50 years.
So they weren't asking for it. Even if you provided it, was it given a substantial discount?
No, so the 4-point inspection is the eligibility inspection.
Oh, that's strictly eligibility.
Yeah, where it looks at like your plumbing.
WinMit's the one that
we would never bind a policy without a wind mitigation report so that we knew what the credits were. But the carriers wouldn't even ask you for one. You didn't even have to prove it. So if you wanted to, you could just always give everybody the best wind mitigation credits and go, here you go. Here's your,
It was that insignificant to them that short amount of time ago.
The compliance part of it, or at least proving it. Yeah, it was, they wouldn't require you to, prove that those credits existed. They were subject to audit, so, you had to produce it.
Sure.
But yeah.
And
I've got a policy here from 2016 that Ross wrote up for a home buyer. You want to guess what it was? Well, this is 2016.
Okay.
So a little bit after.
How much was the purchase price?
I'm going to say it was $1,500.
The dwelling coverage on this policy was $150,000 and it was HO3. So dwelling cover, I don't know what the purchase price was, but maybe it was like a $250,000 home.
Yeah.
Right. Your rebuild cost $150,000. You had higher deductibles, $2,500 and 5%.
Oh, no. All right.
Any guesses? This was written in July of 2016.
$800,
$1,200.
$1,096. The annual premium.
Right.
Oh, wow. And this evidence of insurance is hand signed by Ross.
I just looked. Ross gave us a quote for our Jupiter Beach wrap up on this. We'll take a break. I just did a quote. Ross gave us a quote as always for our listings when we have a Jupiter Beach townhome. And because it's a condo and everything, if you do the regular insurance, which he calls the premium quote, which is basically basic regular deductibles and full replacement costs.
Good coverage.
It was like $2,500 a year, but if you got the discount, it was only $1,025 for a 1,650 square foot townhome.
Oh.
I was really surprised on the beach, right? I was really surprised that it was $1,500 different. Usually I see it 10% difference or something.
The HO6?
Yeah, on the HO6, those premiums can vary wildly the way that we do it. So,
yep. HO6 condo, HO3 single family and townhome.
It's thing like interior or interior and exterior.
Okay.
So HO6 is interior only.
Let's go ahead and take the break. Then we're going to get into the time machine. We're going to start getting numbers. My first question is going to be, what was the median sales price in Palm Beach County for single family homes in January 2012 compared to January 2026?
No cheating, guys. No cheating. Just
Right.
come up.
is that
with it.
dead out already?
I already got my number.
I've got inventory, foreclosures. We got all these stats. How many people bought cash? How many distressed sales?
So I bought in Palm Beach County in 2014. I think I'm going to be ballparky. Nice.
So we're going to check it out on the flip side.
We'll find
Time
out.
machine.
We
Back
got
to 2012.
We got an hour remaining. Thanks for being with us every Saturday. Always remember FloridaTalkRealEstate.com. Know it, use it, love it, share it. You can change lives, including your very own. If you're thinking, I got to be buying a home soon, or I'm going to be selling a home soon, maybe both. Maybe you're stuck with a home, you don't know what to do, or you need just professional guidance in something that touches the world of real estate. FloridaTalkRealEstate.com. That's your resource on Facebook and YouTube. Consume away, like and share. We appreciate you being with us every Saturday. You're always welcome to join us, 877-927-6969. But of course, if you're not comfortable on the radio, just go to FloridaTalkRealEstate.com. We're back in 4 minutes. Florida Talk Real Estate right here on Real Radio.
We're still your at-work station, even if your work happens to be on the kitchen table. Bed. Tell your smart device to play Real Radio 92.1 on iHeartRadio. Here's what's happening with the weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. We are going to continue to see temperatures warm into the middle and upper 70s for this afternoon before a front starts to creep towards the area in the overnight hours. Clouds will build in. We'll see a few showers to kick off your Sunday. Temperatures, unfortunately, stay consistent as this front stalls out over the area.
This report is sponsored by AutoZone. Get in the zone. Starting Stronger starts at AutoZone, where they've got battery solutions in the form of free battery testing, free battery charging, and replacement. Batteries that fit your needs. That's what makes them America's #1 battery destination. Get in the zone. AutoZone.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, Not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, go ahead. I dare you. You're more than welcome. 877-927-6969. It's a 10:08 live on this Saturday, the 3rd of January. That's right. Live for you to start the new year. Happy New Year. Johnny C is me. Jimothy's our producer extraordinaire. What's up, my brother?
Hello, and good morning. Happy Saturday.
Good morning. Mike Rauch, he's the mortgage guy from the mortgage firm. How are you?
I am good. January 3rd.
Sir.
It feels later already for some reason, right? It's like 2026 forever. No, Happy New Year, everybody.
Happy New Year.
First show of 2026.
It sure is.
Let's make it a decent one, right? Better than average.
All right, I'm going to start.
You want to start over?
We'll start.
Oh.
We're going to start.
We're going to start over.
We should start.
We're going from
We should
10.
Oh, forgot.
We need to clap.
Nobody
Yeah, clap.
forgot.
We have to clap.
It's intentional at this point.
All right.
Sorry, Johnny.
That's all right. Can I say hi to everybody and then we'll clap?
Yes.
All right, very good. We have to clap because we're live streaming on Facebook and YouTube. Florida Talk Real Estate on Facebook. Florida Talk Real Estate LLC on YouTube. We'll clap for you in a second here. Ross Komarinetz is with Brightway Insurance, Juno Beach. He'll be clapping before you know it.
That's right. How's everybody doing?
Good to see you as always.
Yeah.
Happy New Year. And Jimmy D, our fearless leader, the Florida Home Pros team, Keller Williams Innovations. He's that leader of those top producing teams. What's up, my guy? Jimmy D, Jim DePola, how you be?
Hey, everything's going great, guys. Happy South Florida. Didn't say it at the beginning of the year. Happy South Florida.
Right,
You might be retiring that one.
Yes.
No?
No. I want to keep that one going.
Okay.
But let's go ahead and do the clap.
Let's clap.
Please clap.
1, 2.
1, 2.
1, 2.
1, 2.
1, 2.
Awesome.
And if you're not doing it at home or in the car or wherever you be,
just do it.
You suck.
There's got to be people out there saying, how in the world is this going to help them with whatever technical problem they're trying to solve?
This
And
is
I
our
don't get it.
rudimentary clapper boards.
I think
what
I
I'm
saw
calling
Joe
it.
Rogan doing it the other day.
Yeah. This is very Joe Rogan-esque. We're pros.
So Shane Gillis over there on 1, 2.
When you make it sound like that, I feel bad. We want to get into the time machine right now. Now we're back to January 2012. This is where we are right now.
Yeah, that's well
January 2012.
That's phenomenal.
Make sure you dry yourself off now that you're getting out of the hot tub time machine. So, what do you guys think the real estate market was in 2012? So
he
the
said-
median sales price in
Palm Beach County.
pump for single family home in Palm Beach County. Now, median sales price means half the home sold for more, half the home sold for less at that month. Single family home.
Are you picking a month or the whole year?
No, January 2012.
January. Okay, I'm revising. I got my number. Who's going first?
You are.
205.
Oh man, I was going a little higher than that.
Ooh,
I feel like I might be overshooting it.
What do you think, Jimmy?
I was going to say like 450.
450.
Maybe.
Me?
Yep.
I was going to say like 325 or 320.
I was going to say like 220.
Think about this, guys. When I say this number, there are people that are going to shed a tear. The median sales price for a single-family home in Palm Beach County in January 2012 was $179,950.
Say what?
Say who?
Yeah. Now, Johnny,
Wow.
now that was the median sales price. Now, when Johnny bought his home in 2014, 2 years later, he was paying about what the median sales price in Palm Beach County was at that time. So when I was telling Johnny when we first met him, you got to buy the house now. This is going to be the lowest we ever seen it. What happened 2 years later?
I paid like 60,000 more than the median.
Mm-hmm.
Yeah.
Yep. Then the median for 2012.
For 2012, yeah.
So how come when I said earlier that 2012 was the valley, you said no?
Well,
I said it was the floor of the
2014
valley.
is when it's really started picking up. 2013, it was kind of rocky roady. So some neighborhoods were doing better and some were doing not so great is what was happening because we were starting to grow a little bit in 2013.
Okay.
Right. The sales were picking up. We had less.
In January of 2013, do you have the median sales price?
Oh my gosh. No, I don't. I'm sorry, Mike.
Is it higher or lower than 12?
I don't know. I really don't. I can't tell
But 14 was higher.
When you look at the Florida Association of Realtors stuff, it shows that 2013 overall was worse.
Was the bottom of the market.
Was the bottom, and then we started picking up 2014.
All right.
But probably part of 2013, we started seeing it pick up a little bit, but really 2014 was the year.
So we all went over on our estimates, but did I win because I was the closest?
You were closest. Well, you paid $20-something thousand more than you needed to.
I would be okay with that. I would overpay by 20 grand.
Totally would. Yeah.
You paid 20 grand.
I'll give you 202.
Although at the time I would have been, I'm not overpaying. Not going to pay more than this.
Did you say something, Jimmy?
Mike, what did you January 2013?
Yeah.
January
Median.
2013 was 168 West Palm in Palm Beach County.
Yeah, so it went down a little bit. Went down 10 grand.
Wow.
So 2013 really was the bottom. So we were still sliding. People were calling up the show in tears, literally.
Yep.
They were losing their house. It wasn't funny. I'm not joking about this.
No, cool.
It was heart-wrenching to hear those people on the show. And we helped so many people back then. We really helped a lot of people. Let me give you a real-life example of somebody I was able to help this week. Very big deal to me, even though it's my only expired listing last year in 2025. It went expired December 31st. It was my most happy expired listing I've ever had. That's because it was a property in Port St. Lucie. It was a lady who is very, very ill. She has stage 4 cancer, lost her job, lost her car, has no income, was living in the house, hadn't made a payment in many years.
It's the pool home?
Mm-hmm. And I put it, and a lawyer came to me and said, I've done everything I can for her for bankruptcy defense. She's got to sell the house. There was equity in it, we thought. It was very tight, though, very thin equity, meaning that she would get something. While we were trying to find a buyer, we priced it as the lowest priced pool home in the city of Port St. Lucie.
Oh, yeah.
It was like that all last year because I picked up that listing probably a year ago. And we had to find the right buyer. We couldn't find it. I must have taken 300 phone calls, interviewed 300 potential buyers in that. Could not find anybody to make it work. So what I told Julia to do, because of our experience from all that stuff that happened in 2012, 2013, 2014, I said, you're probably not going to be able to do this because you have no reportable income, but let's go ahead and try to do a loan mod. And she's like, what's that? So I explained to her what a loan mod was, and then I told her to work with the bank, and I gave her very detailed information about how to work with the bank, what to say, how to say it. She didn't have an attorney or anything. She was doing it on her own, so I felt there was less than a 50-50 chance she would get the loan mod. Well, she got the loan mod about 3 months ago. And she was able to use her fixed income to make the mortgage payment because they reduced it enough where she could afford the mortgage barely.
Amazing.
And I stopped by her house on December 31st, telling her, I may have a buyer, but if I give you this buyer, you may walk away with nothing other than saving yourself from foreclosure. That's it. That's the only benefit. And I told the woman, her name is Julia, I didn't want to do that to her. And I wasn't going to participate in that, even though I could, because it wasn't in her best interest. She better off staying there
with the loan mod.
And I said to her, and I was praying, and I said, have you been making the loan mod on time? She made the loan mod on time for 3 months in a row. That's the golden number. If you make your loan mod payment for 3 months in a row, they make it permanent, and they set it into a permanent loan mod. And that's where she is right now. And awesome. I told her if she has any future issues to give me a call, and I'll be there for her. And all I got out of it was a hug and a smile, but it made my day because I saved somebody from becoming homeless who has stage 4 cancer and had no place to live.
Yeah, that worked out well for her. That's awesome.
So, and that's what we were doing every day back in 2012, 2013, 2014. That was our life. That was
so
our
the
life.
loan mod company didn't kick you back 10 grand. You just did that out of the goodness of your heart.
No, I didn't get paid anything on that. I lost money because I put up the sign, I advertised it. You know, I did all the stuff I would normally do.
Spent time on it, worked on it.
She had no phone, so the way I would reach her is I would have to drive up to Port St. Lucie and knock on her door unannounced. I did that on the 31st.
That's the type of stuff that a new real estate agent would do, but a seasoned professional. Why are you still doing that, Jim? You're like,
because I'm crazy. Because I care about people. Because I care. And I really, to me, when I became a realtor, because of my previous career, I did not like the idea of just doing something for money. I know that sounds crazy, but I'm not really super money hungry or anything. I just like to have a comfortable lifestyle, and to me, it was helping people and impacting people's lives and having a positive impact in people's lives. So when I became
and doing
a
it the
realtor,
right way,
and making sure that it was always about the customer, not about me, and just try to make it happen, do the best they can, and whatever the answer is, that's the answer. That's the best answer. So very happy. I'm not trying to brag about that, but I just want to say that's the impact that the show can make on people. And how did that lady get me? It's because the attorney knew us from the radio show and called me up and said, I know you're the guy to help her.
Awesome.
Very nice.
So anyway, getting back to Palm Beach County, in 2012, how many sales on the market, how many houses on the market percentage-wise were foreclosures or just or short sales? So if you had 100 houses on the market, how many of those 100 houses would be a short sale or or foreclosure?
20%.
20%.
15.
I want to say a crazy high number, but I think it's like in that zone. I'm going to say 32%.
That's pretty high. I was thinking right around 12 to 14%.
Gosh, how bad are your guys' memories?
Was it 60%?
Because I know it's a long time.
I remember the 3%.
Is it 60%?
Yes, Mike got it right.
60%.
60%.
That's
guys.
what I was thinking. You guys threw me off.
0.
I should have went first.
60.
In Palm Beach County.
6 out of every 10
in Palm
homes.
Beach County. 6 out of 10 homes were a short sale or foreclosure.
Which is why the prices were so
cheap,
low.
because nobody wanted to buy, because we had way too many homes and not enough buyers. Why weren't there any buyers? Everybody was unemployed. We had higher unemployment in 2012 compared to now. There weren't people out there buying except investors.
There was also a huge shift in the lending world in 2012, like leading up to 2012.
Tell me about
that. They passed the, Graham Leach Biley Act, whatever it was. Basically,
Graham and Rudd Graham.
No. Graham Leach Biley or Biley or something. But it changed, and this was right before I got into mortgage. Because when I first got in, I mean, it was like weird time. It was the bottom of the market. And lending was getting harder and harder. So the underwriting process was getting much more strict than it had been. They changed the rules. They have qualifying mortgages. So they went from this free-for-all of lending with stated income, no doc loans, fog a mirror, get approved type of thing, to, okay, now we're tightening back up. And not only are we tightening it up to kind of like the stricter guidelines, we're going to make them even stricter. Like we need to be really careful about, because mortgages went from being the gold standard of reliability as far as an investment vehicle, right? A mortgage-backed security was an investment vehicle, and they were guaranteed returns. A 30-year mortgage always paid. and then it went to, collapsing and not paying, and massive defaults, and therefore those investments didn't pay, right? And people went upside down on those things, and so they wanted to get mortgages back to a reliable, safe, long-term investment instrument that had guaranteed returns, whether it was 3%, 5%, 7%, whatever it was, guaranteed. And so they really tightened up, and that's right when I remember the loan originators who had kind of been through the peak of easy to do business to like hard to do business, and a lot of people fell out, and they were very concerned about debt to income ratios and what's happening with automated underwriting and the guidelines tightening up, and they're like overlays on top of overlays, and it was a tough time to navigate the mortgage world.
And that was one of the things I read when I was doing my research, and I forgot to mention it, was that the mortgages were so tough to get during this period. It was really, really hard. And that was another reason why people weren't buying homes. They just couldn't, right? The lending standards were just too tough for a large amount of people. And a lot of people, when you have 6 out of 10 homes that are on the market that are foreclosures, that means there's a lot of people that lost their home and are not going to be buying anytime soon.
Jim, I remember one of the very first loan applications I did, and this was back, you would print it out and someone would hand sign. It was before we were doing e-signing at the time. Not that it didn't exist, but we weren't doing it. And I remember getting an underwriting list, we call conditions. And one of the conditions was for the borrower to explain the variation in their signatures across the documents.
Oh, I forgot about that. That's true.
It was like, I remember I have to go to this bar who I sat there and watched them sign everything. They just, sloppy. Yeah. When you're signing your name 20 times, 30 times, it gets a little sloppy.
Sure.
And this was the loan application, not even the final documents. And I just remember being freaked out. Like, I'm going to go to this person who I sat and watched, and I have to get them to explain why their signature is different on document A versus document B, or slight variation. But that was the type of underwriting conditions we would get at the time. So there was just like everything was, not that we don't do fine tooth comb now, but it was shotgun fine tooth comb. Whereas right now it's very specific fine tooth comb related to income, related to assets. So, but yeah, it was tough to get financing.
It really was. Here's another thing, inventory. So what was the inventory, meaning how many houses there were to sell on the market? How many active properties in Palm Beach County in 2012?
Can you give us just a baseline? What's the January number for, like, is it 1,500 homes for sale?
Right now? Today we have about 4,900 homes for sale in Palm Beach, Palm Beach County. Yeah, okay. Like 4,900.
All right. So I'll say like 8,000.
Oh, because there were a bunch of distressed ones. Oh, that's right. Inventory was crazy. No, I'm going to say around the same number, around $5,000 right now.
$5,000. What do you think, Russ?
I mean, I was going to say 8.
There was less people.
Yeah, 6, 7.
12,000 homes for sale. If in today's market we have about I think it's 49,000 homes for sale in the whole MLS, which covers like 7 counties or something, or a whole bunch of counties, like the whole Southeast region. Just Palm Beach County, 12,000 back in 2012, when prices were $178,000. Right? Nobody wanted to buy.
And we've been talking about.
I'm not buying that house.
We've been talking about this 2025 being it shifted more to a buyer's market than we've had in a long, long time, and I guess it's since then.
But I remember always just saying, oh, if they would just loan mod everybody that has a home wants to be in that home, just make it so they can afford it. I mean, we just talked about Julia, and it's really coming back to me like, man, why didn't they just loan mod everybody? The industry really stays kind of stable if they did that.
They learned their lesson. Look what they did in COVID, right? They basically said, hey, forget about loan mods. We don't want anybody even like getting to that point. You don't have to pay your mortgage for 3 months, and then 3 months, and then 3 months, and another, and then 18 months, right? So was that overboard? I don't know, but they basically said, we don't want people defaulting on their homes.
Don't want them.
We can't afford that.
Until they were like, all right, maybe we do. You want to say hi to AJ?
Yeah, and he'll have a good perspective. He's been around for so long. He remembers 2012.
Oh, I'm sure. Yeah. Oh, probably. He's probably sweating right now. Like, oh, God. AJ Holman with experienceappraiser.com. How are you? And welcome. And Happy New Year.
Good morning, gentlemen.
Happy New Year.
AJ, what's up, buddy?
You guys are giving me PTSD.
What was it like being an appraiser What was it like being an appraiser that's different now compared to 2012 when we were in this major real estate crisis back then?
God, it's been such a whiplash, you know. It was depressing to be an appraiser, obviously, 2006, 7, 8. And then just the boom, you know, and everybody goes from, we need you to be super cautious to, we really need these sales to go through. And, you know, it's just constant pressure up and down and up and down. And it's been crazy. It's been a wild ride.
Did you work with the banks a lot at that time? Like who was your main customer at that point?
My main customer was Fannie Mae Direct.
Mm-hmm.
Because every time they foreclosed or a bank foreclosed, there was so much work for appraisers because when they would foreclose, they would want an appraisal. The lender would want an appraisal to know if they should repair it to resell it. Then if Fannie Mae got it, they would want an appraisal for the current value and then also a recommendation of repairs because a lot of people were trashing them, and I don't blame them.
Mm-hmm.
And then when it's sold, there would be another appraisal. So there was like 5 appraisals for every property.
Do you feel like you had pressure from the banks to either keep the appraisal higher so they weren't losing as much money or something, or it was really truly arm's length?
No, it was, look, when I first got the business before the implosion, the only time we ever got pressure was from brokers, individuals.
Mm-hmm.
The lenders themselves never gave us the pressure. You know, I remember getting calls from people putting a lot of pressure on me, but I would have 50 or 100 clients. So if somebody wanted me to do something I wasn't comfortable with, I could just drop them as a client and it had almost no impact on my business. But then they came in and tried to regulate and tried to make it better and tried to make less pressure on us. And how did they do that? They consolidated everything down to where we only had 5 clients and they were these big clearinghouses. So now if somebody gives me pressure, now it's 20% of my business. You know, and I still didn't give into it, but as with most things, the government tried to come in and fix it, and I think they did a horrible disservice to the appraisal industry.
Mm-hmm.
Yeah, I'm curious, AJ, like leading up to, and so in the great times where home values were just, you know, every month it was higher. Were you getting pressure then from like people like me, so loan originators calling? Because I think back then they were less strict about communications with the appraisers, right? So you can call up your guy and be like, hey, you know, we really need this one to go through. Any way you can squeak out this extra 20 grand or whatever. Were you getting a lot of those types of calls?
I would get a lot of those calls, but 95% of the time you would just tell them, look, it is what it is. This is all I could do. But then you would get these guys that would just, I remember one guy in particular arguing with me about a lake view, what the value of a lake view was.
$80,000
from some high rise in Manhattan. You know, going, you can't tell me that this lake view is only 10 grand. And I'm like, it's a collection water. It's nothing.
It's not a lake.
I remember, you know, back then you used to, the loan officer would call the appraiser and order the appraisal.
Mm-hmm.
Sure.
And so you'd be like, hey, I need 450.
Yeah.
Well, but again, I had 100, 200 clients. So if a client behaved that way, we just dropped them. You know, go find someone else. It was easy enough. But then when it got to these big mills, now you're doing, you know, like I said, 20% of your business through one company. You know, it makes it, that's pressure.
Mm-hmm. Yeah, it is. It is. AJ, just I want to keep it a little short because I want to go on to the St. Lucie County, which is even more stunning than what we're talking about now, what happened in 2012. But AJ, what do you think is, like, what is your opinion from the appraisal perspective of what's going to happen to home values in the South Florida area? I know that's very general in 2026.
You already know my answer, though, Joe. You already know my answer. I don't have a crystal ball. We invaded Venezuela last night. I don't know what's going to happen. You know, there's too many factors. There's just too many factors. I'm really good at telling you what happened yesterday, and I'm horrible at telling you what's going to happen tomorrow.
Wimp. you always got to give the. I'll always give you the prediction, whether it works or not. I don't care. I'll give it to you. I'm teasing you.
AJ, just do what the weather guys do. Yeah, it could be higher, it could be lower. You know, it's somewhere in there, somewhere in that zone.
Yep.
I think it's going to be pretty flattish.
If you get an appraiser that's going to tell you what's happening tomorrow, you don't have a good appraiser.
Well, that part's actually true.
That's not what we do. Realtors, yes. Everybody else in the industry can express an opinion, but when we express an opinion, people are like, "Well, he's an appraiser. He probably has a pretty good idea." No, I don't. You know, I really don't.
He's only ever looking at what's happened, right? Like not what's. I mean, you are meant to like assess trends in a neighborhood, but he works
on trends.
Yeah, but it's based on what's happened. That's the trend he's saying.
I mean,
right?
For the appraisal part, but I know that he kind of. I know last year you were trying to figure out what was going on. So,
well, I looked last night again, and that graph that I always like to send you, Jim, that shows how many actives there are, how many sales, and how many pendings broken down monthly. The good news is, when we were talking about that a year ago, the inventory kept going up, but the sales volume was not going up. What I do see now is good absorption of the inventory. There's an increasing number of sales. There's increasing sales volume. There's increasing listing activity too. There's a lot of inventory, but at least some of it's getting sucked up, where for a little while there it was pretty stagnant.
That's actually true, and the stats are actually showing that right now. The sales haven't been the strongest ever, but this year, almost every single month except for twos, you were in the 4 digits, meaning 1,000 or more homes. During the peak, I was trying to figure it out. We were at like 1,600 homes, which was like really, really high, right? So anytime you're like 1,200 to 1,400 is kind of normal-ish.
Neutral-ish.
Yeah, so we're in the 11s right now, so we're not that far off of normal, and our inventory is reduced a little. Months inventory's gone down a little bit. But AJ, I hope you have a great weekend. And if anybody actually needs an appraiser, you got to call AJ. You know why? Not only has he been around forever, right? He's my age, so I'm not making him sound too old, okay? But he's been around, born and raised in Palm Beach County. But more importantly, when you don't need an appraisal, AJ is going to tell you so that you don't pay for an appraisal you don't need. And that's one of the best reasons, other than he's really good at what he does.
What is that?
He's also got that extra special ingredient that we're all looking for in this room, which is just give me what I really need and don't rip me off in the process.
That's right.
So please call AJ, experienceappraisers.com. You're welcome.
And thank you guys for helping everybody like you have been. We appreciate it. And I'll let you go.
Thanks, AJ.
Thanks,
AJ. Happy New Year.
Appreciate you.
I got to go into St. Lucie County, which is my favorite county. Actually, this number is much higher than I thought it was going to be. So what was the median sales price for a single family home? We know that in Palm Beach County, it was $179,950 or $178,950. What do you think Port St. Lucie or St. Lucie County was for single family homes in 2012, January 2012?
95.
I was thinking like 130.
Okay.
Yeah, it's going to be lower. Like 60% is and I'm trying to do the math real quick. Let's call it 107.
107?
110.
Is that crazy? It sounds so crazy.
Okay. I thought it was much lower than this, way lower than this, but it's still low. And got to remember, this is back in the day when nobody wanted to buy houses. The inventory was just sitting there. Nobody wanted to touch these houses, right? And the single family home in Palm Beach County, St. Lucie County, 120 to 130, somewhere right around there. So a lot of you were close in there, but 120, right?
Wait, who said that? You said that?
Today?
No, I said 130.
Today, right now. Now, this is November because we don't have the most recent stats out there. November of this year, 405,000 versus 125 in 2012.
Every listing I see is like 490, 500.
Yep. So 405 because the list price is lower than is higher than the sales price right now over there. And here's another thing. the days on market were over 100 days on market for the average days on market, which is very high. Like even today, where it's very common to have houses 120, 150, 200 days on market, it still shows that the average days on market is like 50 something days on market, right? For the median, right? But I remember in Port St. Lucie when I was doing short sales and trying to take the bank where the house was like 210,000 and we were selling it for 80 and trying to get the bank to agree, right? And one of the things that usually won was to say, if you don't sell this house to this buyer right now for 80,000, what's going to happen is you're going to reject it and you might not get an offer for years. And there was literally years. There were neighborhoods in Port St. Lucie when I did the absorption rate, which is how many sales compared to how many listings are in that neighborhood. How long would it take to gobble them all up? 6 years inventory in some of these neighborhoods.
And they had the Chinese drywall issue.
Yep. And the Chinese drywall was another shock to the system too. And that caused a lot of distress sales because sometimes people
was it really Chinese or is that just a label they put on it?
No, it was actually Chinese drywall. What was happening was the boom was so big that we used to get all our drywall from Canada, or great majority, like 80% of it, and they couldn't handle.
Keep up.
So what happened is we went to China, and China was taking the gypsum out of the ground, but apparently it was very contaminated. And when they brought over here, it would create these really bad sulfurous odors. It smelled like sulfur.
It was a stink.
It was a stink. But more importantly, the chemicals leaching from the drywall, it would rot out the AC coils, rot out your electrical wires in your walls, things like that.
That's good stuff.
Yeah.
Listen, AJ said nobody had a crystal ball. There's a prediction here on the comments.
Oh, cool.
The incoming housing crash is projected to be 10 times worse than 2008.
By whom?
Okay.
So
who's predicted that? No, I'm not
Ryan
saying
H something.
I'm not saying the person writing it. Who's the person that they heard it from said that?
And who's projecting a housing crunch? But even if there were one, what is 10 times? We just went over numbers. So 10 times worse than that means if you play your cards right,
you get
Palm Beach County.
They'll pay you.
No, they're paying you. No,
but
it was 180. 10 times you're going to get a house for $18,000 in Palm Beach County.
Just hold tight. There's a lot of people that have been waiting for that crash.
Okay, so let's. What's the person's name?
I think it's Ryan.
Okay, hey Ryan.
H.
Okay, we're not picking on you, but this is such a common I've heard every single year since we've been on the show. We're gonna have a crash. We're gonna have a crash. Well, a broken clock. We are gonna have a crash eventually. But let me ask you this: we know that the foreclosure market in 2012 was 60%. And by the way, in Palm Beach, in St. Lucie, it doesn't have the St. Lucie foreclosure, but it was about the same. So my question is, what's the foreclosure rate today?
Yeah.
I'm asking everybody, does anybody have an idea percentage-wise?
3%?
Less than 3%.
Yeah.
Less than 3%.
Yeah.
One.
It's a little over 1%. It's 1.5%.
Okay.
So what is it going to take for us to get to 1.5 to 60%?
Well, we need unemployment is what we need.
Yeah.
So I'm sure that's a huge part of whoever made this prediction, right? He's sharing some information.
Yeah,
that he
and
read.
I'm not beating up on Ryan. I'm saying the person that gave him the information.
If unemployment starts circling the drain, everybody starts losing their jobs. I'm sure there will be some impact in the housing market.
That will happen.
Yes.
And the thing is, though, is that in order to get to a crisis level,
everyone has to stop.
Right. Everything has to happen. And everybody is so shell-shocked. It's like in our DNA, that crash that we had from the dirty mortgages, that's like in our DNA right now. There are millennials who weren't even born when that happened, are still worried about the real estate market. They weren't even born when that happened.
Earlier in the show, Ross made a mention that he was in like that side of the industry and saw the writing on the wall. I was on the radio. We talked about the writing on the wall. Like it wasn't hard to see that we were going down a very bad path as far as the mortgage world. It was kind of painfully obvious.
It was.
I don't see
in hindsight or
no, in real time. Yeah, I had people that would tell me all the time that I'm an idiot. Why do they even let me on the radio? Because I'd be like, y'all are going to choke on these mortgages you're picking up right now.
When
I'm an idiot. right?
I got the same thing, Johnny. When I was dabbling in real estate while I was still a journalist. So I was reading a lot, right? I was reading all this stuff.
And at that time, I was saying buy gold. Gold was like $130 an ounce, by the way.
Really, that's what it was back then.
Yeah.
So, but when I used to talk to my real estate people that I knew and talk like a journalist of what was happening in the market and what the news was, and then trying to predict or project what that means for our market, and it didn't look good. Like Johnny was saying, it was unsustainable. It was totally unsustainable.
Totally unsustainable.
And everybody was giving me problems. That's what's wrong with the media. If you keep putting out in the headlines that we have a problem, you're going to create the problem. I'm like, no,
snowball.
we're telling you what the problem is so that you can deal with it.
Don't look up.
Right?
Jim.
It's like, exactly. Right?
So are we predicting 2026?
Not yet.
How much
we're
time
almost
do
there.
we need?
We're almost there. Oh, what? Are we almost? Yeah, we got enough time.
Okay.
Hold on, just a little bit more. But so a couple other things to remember the shadow inventory that everybody predicted that was going to flood the markets and make it even worse than we were.
Well, so this is all the foreclosures that were waiting that were going to eventually come that we're still waiting on.
Right. And the foreclosure. And we kept saying, we don't see any shadow inventory. It was called shadow inventory or the ghost market. Right. And that was like a big thing. Oh, the second shoe's going to drop because everybody was freaked out.
Now, if it was there,
it was
there, there's, something to prepare for. It just hasn't shown itself.
Now,
it just could have been slowly trickled into the market, right? Like
Paul Krasker will tell you, the law office of Paul Krasker, what he will say, because he's involved in a much higher level in real estate than I'll probably ever be. But Paul said that a lot of the IHPs and Haven, I forget the Haven Group, all those industrial investors, all the regular, like the big corporations came in and took all that shadow inventory. And I believe that probably is what happened.
And they still own it or they've sold it?
Some of it they sold off. They kept it for a 5-year cycle and sold it off. Some of them they're still keeping, but they're really not gobbling up much right now, from what I understand. They're not still gobbling up the inventory as much as they were.
Well, it's not like low. So there's this buy low, sell high.
Exactly.
That's it.
So all of that was like what was happening in 2012. Now let me just wrap up Palm Beach County for November of 2025. Okay.
Now we start the part of the show. What's happened since 2012? Go through it year by year.
Yeah, here we go. So let me just give you like a quick cross section. Median sales price 2012, Palm Beach County, $179,950. Today, $600,000. Okay, actually $605,000, right? So $605,000 versus $179,950. Prices are unsustainable. It's going to crash again. It increased by 300% in 12 years. 300% in 12 years, guys.
What was the average median sales price in 2002?
That's a good question. I don't know. Now, a couple other things. The amount of inventory, we've only got a little under 5,000 right now. We used to have 12,000. The list price to sold price is about the same. It's about 94%, 93.8. This is the lowest list price to sold price I've seen in a long time in Palm Beach County for single family homes. That's because houses were priced too high based on the needs of the buyers, and the ones that are selling are the ones that are motivated to sell at a price that buyers feel is fair in this market right now based on interest rates.
And even then, it's still generally very good equity position for those sellers, right?
Yes. And they're still going to have equity in the property, even if they're selling it low. Most of them are lower than what they want, than they wanted, right? But they still have a ton of equity. Now, interest rates back then, guys, we already checked out a 2016 insurance quote. The interest rates were about 3.9 in January 2012. 3.9.
Good old days.
Right. And then I remember when we hit 5 in 2015, everybody started losing their religion. 5?
Totally.
I can't believe that we're at 5. I can't believe we got to get down to 3 again. So anyway, that's what happened in the time machine. I thought it was kind of interesting to go back. Thanks, guys, for bearing with me.
I looked at that number in 2002. It was 199.
For real? So
yeah. So and the reason I asked that question is because you take the peaks and the valleys, and you kind of miss the broad view of, do we have kind of like a straight line projection in home value? So yes, we had these crazy increases, decrease, and increase and decrease. But if you look over the broad term, we've kind of had just like a steady increase, appreciation in home values. So from 2002 to 2026, it's gone from 200 to 600.
Yes.
Over 24 years.
Right.
I don't know what appreciation
that's like 300%.
But what is it year over year? I don't know. Somebody
300% divided by 12. That's going to come out to what? 300 by 12.
Why are you saying 12 though?
2.5.
2012 to
2026.
30 divided.
No, 2002 to 2026.
So 23 years. 300 divided by 23, 13% a year. That's totally crazy, guys. That's the so that's what we're going to get into now, is like what we expect to happen in the future. I have a strong opinion about values coming out. I might be wrong, but I'm going to tell you what they are, because I told AJ that I'm not a wimp. So if I'm wrong, I'm wrong. But Johnny, I'd like to start off with the everyman first, if you will.
Sure.
What do you think is going to happen, like with insurance, interest rates, home sales, things like that in 2026?
I think we're on a kind of smooth sail right now. I think we're probably going to stick in around the same kind of area.
Like 6% interest rates.
Yeah.
Insurance high, but not super high like it used to be.
Getting better and better. More and more options. It seemed like about a month ago, Ross was kind of telling us that it looks like as we get to the new year, a bunch of carriers were going to start having, rate decreases. The cards were looking that way. So I think the insurance is going to continue to be a little bit better, barring any major catastrophe. And I think the market will hold kind of where it is. Maybe we'll lose a little bit of value, right? Just because I think it's going to take, as you noted earlier, Port St. Lucie County, a lot of the listings like 490, 500, but they're closing closer to 400. So that's going to bring the values down, quote unquote, right? Because the closed sales are going to come down a little bit, but I don't think it's going to be dramatic. I think we hold pretty strong for the most part.
So last week you were biting at the bit to find out why the national economists, I know that you might have known this, but you were talking on the air.
No, I waited.
Because you want to know why the national economists are predicting that interest rates are going to hold steady in the low sixes this year.
Right.
That's what they're predicting.
Right.
And that they're predicting that we're going to have a surge in real estate this year. No, not like a super crazy upswing, but a healthy like 10% more in sales, like more sales, not necessarily prices,
right?
But more sales, like 10% more than this year. And that also they expect to see some areas having price increases, price appreciation, others having small depreciation. And you kept saying, well, how's that going to work? The reason why they're saying the buyers are going to come back this year, is income increases.
That's hilarious.
That's why I'm laughing too. I just don't see that.
So
Does anybody?
Wait, is this one source saying?
No, this is many economic sources.
If you tell me rates are going to hold steady, and that sales are going to increase, I'm having trouble squaring
because
those two
they're
things
saying that wages are going to increase, Mike. That's what they're predicting.
So, but
I don't agree with
one
it.
source saying all that. That's what I'm saying.
No, it's many sources. This is National Association of Realtors. Yeah. This is like people that follow the Fed Reserve and like what's happening with the Fed.
I watched something just yesterday. This outlet was predicting 3 rate drops in the first half of 2026.
Yeah.
Now, is that quarter point, half point? Is it 3 quarters over the 3? I don't know. But they're predicting rate drops in the first half of 2026.
Once a new Fed chair gets in play, yeah.
Well, that's happening in May. It's going to certainly change the dynamic on the board, right? It's not just the Fed chair; they're all equal voting members.
Of course,
the Fed chair is the mouthpiece of the Fed, and you can kind of predict. There's already been some, hey, now there's a little bit of disagreement with the board of governors, right?
It has been
introduced
a good year.
over, yeah. So you could see that, and I could certainly say, okay, well, when that happens, it's inevitable that the Fed chair is going to have some influence or whatever. You're going to see some drops because of that. But they also, as always, have to keep an eye on inflation, have to keep an eye on unemployment. and those two things should be driving that interest rate decision. And I don't see like huge changes there, right? I think are we expecting unemployment? You're saying wages are going to increase, so unemployment's coming down?
Wages go up, and you can't deny it, but like, because minimum wage goes up in many states, they have it staggered. Minimum wage just popped up in Florida, and it's going to go up again next year, and so yeah, wages go up, but that doesn't mean everybody's wages go up.
Right.
Just because you go from 14 to $15 an hour doesn't mean now you're like, well, now I can buy that $600,000 house in Palm Beach County.
Time machine. Hot tub.
Yeah.
Sorry.
So yes, wages are going up, but not across the board and not significantly in the areas that it's going to change things.
And what's going to happen with unemployment?
What they're expecting is to be right now, they're expecting the next several months, not just month or two, to be a no hire, no fire market.
Okay.
Where the employers aren't really laying off a lot of people. There are layoffs, but not a tremendous amount, not massive, just flooding of layoffs. They're being more precise about the layoffs that they're doing. And the reason why they're not laying off as many people is they don't want to hire them back. So they're kind of keeping their powder dry. So they're laying off people to reduce costs.
Start watching the scheduling get thinner and thinner. This is how they work. We're not going to fire anybody, but we're going to give them a little less hours. We'll work on as small a crew as we can. Just pay attention to your.
Is this the year where American manufacturing really ramps up?
I don't know. The reason why I say I don't know, the manufacturing jobs have decreased over the last 18 months or so. They were decreasing the year before last too. But the bigger problem is, where are all these factories that are being built? Are these factories being built? Because that's what it's going to take to get the manufacturing jobs increased. That's the whole plan, is that we're building factories and then we're going to have all the people come in. I don't know. Maybe we are building factories all over the country that's going to absorb all these people, but I don't see that in the news. I just hear about factories. What kind of factories? Where are they going to be? What are they going to build? Anyway, it doesn't matter. The bottom line
and if they are built, they're all highly motivated through the tax code for automation. Not only do they get tax breaks to invest in the automation, but they get the incentive on top of it.
I just don't see wages increasing that dramatically to have a 10% boost in housing prices unless something else happens.
Maybe we're going to get that universal basic income.
There it is. What we could all afford. Fat house.
Well, so we all retire? Is that what it is?
I mean, I don't know if it's.
Do you have to be
that
working
much,
to
Michael.
receive it?
I don't think so.
No,
you
right?
have to not be working.
You have to be living.
Right.
Interesting. Is this a year for universal basic income, Jim?
No. Do you believe that interest rates are going to hold pretty steady in the low sixes this year?
If I'm predicting, I'd say no. I'd say they're going to go down. Let's say between 5.5 and 6.
Okay.
As far as like what Freddie's reporting.
But you don't think, based on everything that's happening right now, what we know, you don't think it's going to go 6.5, 7. It's more likely to go 6, 5.5 than 6.5, 7.
I would not predict an increase. So if anything, either flat or decrease.
Okay.
But not huge.
But
right?
nothing that's going to make it like
It'll
a
be
3.6. And I got
I think a 5 in the first number is a psychological difference for a lot of people, though.
No,
it's going to open up this is we talked about earlier about like how to operate and doing the right thing. So we get into this would be a refi year if rates do come down a little bit, and so I'll be having a lot of conversations about, does it make sense, half a point or a point. There's going to be a lot of people where refis, they're going to look hard at refinance. So
that's true.
At least I'll just throw out like, hey, let's talk about it. It's not slam dunk just because rates lower. You got to have goals. You should have a real discussion about whether a refi makes sense. But I think that those conversations will be coming, driven by slight reductions in interest rates.
Ross, do you think that that we're going to continue to see through 2026 decreases? We know that Citizens has already put out that they're going to reduce their prices this year, and we are hoping that the other companies are going to do the same. Do you think that will continue through the whole year, even if we get like a hurricane or two to hit our state?
Well, I mean, that if the rates will all be filed before, or most of the time before,
thinking,
and the reinsurance all shored up, by June 1st. So that's half the year gone already. And typically, if we get hit with storms, it's usually later in the year. So I think rates will continue to go down this year as carriers want to become more competitive and take on more market share and make more money, because all of them they were profitable last year. So that was good. So as we go throughout this continuing on, I think we'll continue to see them drop a little bit.
Mm-hmm.
We're not going to get back to 2012, but
no. It would
And
be
do
nice.
you think,
but it would be
Jim,
nice.
if you're considering selling,
Let me tell you, if you're considering selling, you really should do it sooner than later. I don't think that the values are going to go up right away. Next week, we're going to go in a little bit more about this, but this year we took at least a 5% haircut in the local area for the average home. I think it's closer to like 8 or 9%. I still think we have another 10% to go for affordability, assuming that interest rates stay where they go. And even if we lost 20%, okay, that means over the last 23 years, instead of 13% increase, we had like a 9%,
Right.
a 9% increase, and nobody should be complaining about that. Property, just like stocks, the house values go up and down over time, and you can't expect a stock to go up, 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 up without stopping. And you can't expect houses to do that either, or you get into trouble that we're in now.
Right.
Can I make one final prediction for our audience?
Sure.
You are not going to be able to time it perfectly. But
No.
if you want the best chance at getting the timing right, get prepared.
Yep.
Give us a call. If you're a potential seller this year, talk to Jim now, look at the numbers, kind of like do your bird in the hand versus one in, whatever, two in the bush. If you're a potential buyer this year, you're going to need a loan. Or the earlier, the better, right? Like if you're potentially even a refinance this year, we should talk and make sure that you've got things lined up so you can get the best of whatever is out there at the time. And then you can sit back and watch and wait and use your crystal ball, your own crystal ball. But you need to be prepared so that when the opportunity presents itself, if it comes into your view, you got to be able to
And don't
pull the
treat
trigger.
your house like a stock market thing.
Sure.
It isn't an asset that way. You want it to improve and appreciate, but it isn't what you're doing to make money. It's a house that you're living in. We're talking about homesteaded houses here. It's a house you're raising your family and your life and doing everything that you do. And the fact that you get appreciation over time is a nice benefit.
It is.
But it isn't that you're trying to be the next stock guy trying to do the big short or something. If you're just trying to buy a house, you're trying to buy a house to live in and raise your family. And there's always a market for those people all the time. And we just make that happen for you.
Yep.
No matter what the market
Should
is.
we still be buying gold, John?
That's a tougher investment now.
Yeah.
But always, right? Always.
Is it up to 4,000?
If only you
It's
had
past,
advised
yeah.
people to buy Bitcoin in 2000 as well.
I was not a believer. Far from a believer. And yes, that's the truth. Thank you for being with us every Saturday and for putting the trust in the Florida Talk Real Estate team. If you're on Facebook and YouTube, consume away, hit the share and like button. You can absolutely put somebody on an amazing team. You have no idea what they're going through. Maybe they are looking to buy a home, sell their home. They're stuck with a home. They don't know what to do. And they just need a little nudge. And giving them a team of pros, professionals, experts in their field, you'd be helping them out big time. But maybe this someone is you. As Mike noted, if you're thinking this is your year, get everything lined up. Don't wait. It does not cost you a dime to have an understanding of where you stand and what you need to do to make it a reality. Find out. FloridaTalkRealEstate.com. It's a great resource. Know it, use it, love it, share it. Timothy, our producer extraordinaire, thanks for everything always.
Thank you. Have a great weekend, gentlemen.
You as well. Mike Rao, the mortgage guy from the mortgage firm. Thank you for everything. Happy New Year.
For everything. Happy New Year to you, sir. Thank you for everything.
Oh, you're very welcome.
Yeah.
There's Ross Komarinetz with Brightway Insurance, Juno Beach. Happy New Year to you. And thank you.
Happy New Year. You're very welcome. Happy New Year.
Happy New Year.